Thank you all for being here.
Thank you.
Bonnie, let's start with you.
Oh, okay. Ladies first, I suppose.
We're seeing a wave of new listing destinations. What are you seeing, and do you think that the traditional financial powerhouses, you know, New York, London, these exchanges are going to see challenges in the years ahead?
Okay. Maybe let me start with what I am seeing on my part of the world. I'm very conscious that I'm still the old-fashioned stock exchange when it comes to capital raising. And the reason I'm saying that is because I guess, you know, a lot of you would have been reading about how the private money, you know, has been taking over a little bit. And quite a lot of companies have decided to stay private for longer. And there's a lot of available capital, whether it's from private equity or private credit, et cetera. However, I'm very pleased to say that actually year to date, we've been doing really quite well in Hong Kong. In fact, we have by now probably completed close to 80 IPOs, raising close to $30 billion for these newly listed companies. And we're gladly sort of at the top of the global league table. And I guess at the end of the day, running an exchange or running the capital markets is really about connecting capital with opportunity. And there are now various different alternatives that companies can seek to make use of. But my personal view is that we're going to see this increasing availability of different venues, right? So that companies will have more choices, investors will have more choices. And in fact, you alluded to it at the beginning already with the technology now also being featured. I think, you know, people are now seeing a lot more proliferation of different fundraising channels and means. So I think it's upon us runners or operators of exchanges to make sure that, you know, we find ways to stay relevant.
Absolutely, and Khalid, bringing you into the conversation. Yesterday I was on a panel with an entrepreneur who has decided to stay private a little bit longer. What are you seeing in this region? And
thank you, Louis. Good afternoon. Yani, if I look at it from the Saudi capital market point of view and the Saudi exchange point of view, we have been blessed also of having a very healthy IPO pipeline. Of course, it's driven by the macro level transformation that is happening in the kingdom. We witness a growth in the last 3 years, I would say, at least on the average IPO pipeline, we have around 8 to 9 IPOs a year. Now the average is around 40, 45 IPOs a year, which is a significant increase. And I think that for us, it's mainly driven by the transformation driven by Vision 2030. However, as Bonnie was alluding to, the alternative channels and platforms for issuers, for investors, for market intermediaries today are totally different. We're playing with different players today compared to yesterday. Traditional exchanges used to be the go-to to capital formation. It started a few years ago on the private market, but it has its own challenges, in my opinion. Now it's a wider range of channels, but I just want to remind ourselves that historically stock exchanges are a source of innovation from the beginning, because whatever we provide today is based on technology and innovation. The products that has been on the markets between developed, emerging and frontier markets has been there for decades. And these are based on innovation. And I think the situation we are in today is basically we need to make sure that we are faster, we are adaptive to what the clients needs, rather than being the only capital formation platform.
well, Bob, I think when people think of the Nasdaq, they think of huge tech IPOs, but actually your business is everything outside of the US. And the Nasdaq technology underpins, I think you said, 140 different exchanges. So tell us a little bit about your model.
Yes, thanks, Lee. I'm actually honored to be up here with two of Nasdaq's long-term partners. So thank you for inviting me to participate with them today. And I think what is interesting is that Nasdaq has grown as an organization. When I joined 19 years ago, we kind of did two things. We did listings and trading. And that's still the kind of the bow of the ship. When people think of Nasdaq, they think NVIDIA today, but they also think Microsoft, they think Starbucks, they think Regeneron, they think the biotech sector that we've been able to develop. But the reality is we've gone from a $5 billion market cap company to a $5 billion revenue company that's $50 billion in market cap, and done acquisitions, and we do everything from trading technology, matching technology, regulatory technology, risk and treasury management, anti-financial crimes. So we do a lot of other things that are beyond the scope of just thinking listings and trading these days. But as Lee said, I spend most of my time working with entrepreneurs around the globe. We have about 800 companies that are non-US, and that's where I spend my time working with them, as well as talking to those companies that might be public companies. And one of the things that I'll say to all of you, which is what I said backstage, is that I believe that most companies belong in their local markets. I firmly do. I don't go to Hong Kong, China, Tokyo, Singapore, Argentina, and try to convince companies not to list in their local markets, because most companies do belong there. But there's a small group of companies every year that choose to list outside their local market, and we at Nasdaq firmly believe we have the strongest value proposition for those companies to list on our exchange, and that's where I spend most of my time.
Yeah, I wanted to say we do want to take some questions from the audience. So if you have one, raise your hand. We'll get a mic over to you. But Bonnie, I think you said that you have about 200 companies in the pipeline.
More than that, we're 300.
300 by now, okay.
And growing.
Talk about what kind of companies, like
Yeah.
what do investors want right now?
Right. So what do investors want right now? Well, maybe I should talk about the 80 IPOs that we've completed year to date. I would say over half of them are technology focused, so what we call new economy companies. And this year in particular, we've been doing especially strong in the biotechnology space. I think this is just very well sought after. And if I look at especially the books, during the IPO times for these companies, we are very glad to see actually a return of international investors, because as you've probably been reading in the last few years, we went through a phase where there were questions, right, as to the investability of Chinese stocks. But I think we have made a lot of progress, and so this year, what we were able to see is really very strong appetite on the investor side. They want AI, they want anything to do with semiconductor, they want a lot of names in the green technology space. But aside from technology, what is also emerging is a very interesting phenomena, which is what we call new consumption. Okay, I don't know if you know this thing called Labubu.
Of course.
Of course, right? I guess a lot of people know about Labubus. Right?
I was with Grant in Shanghai a couple weeks ago.
Right.
He's built an amazing business.
Right. So we now see a lot of these sort of new companies in what we call the IP space, and they're growing very quickly, very well sought after. In fact, I've visited a few cities recently, Paris, London, and I always see the Pop Mart store and the lines outside waiting to get their blind box. So
Tim Cook just got one. Did you see that? Yeah.
Yes. I got a mini one for myself. Anyways, so really quite a broad spectrum of what interests investors, and to sort of put more color on it, I think what we are seeing also is a desire on the part of investors around the world to seek more diversification. I think Bob has been obviously doing really well on the Nasdaq side, and we see a lot of flows, right, globally, being attracted or gravitating towards the US markets. But I think amidst a lot of the volatility or uncertainty and predictability we're seeing in the markets, it's quite a phenomena this year, seeing more investors trying to adopt a more diversified trading or investment strategy. So the 300 companies in my pipeline this year, waiting to be listed, I would say still, predominantly in the tech space, but we are now seeing a lot more variety. In fact, I can tell you that in the last 2 months, I've probably met over 20 different types of humanoid robots.
Wow,
So,
20 different types.
Yeah. They do all
Diverse
sorts of
array of
funny things.
humanoids.
Yeah. And, quite a few of them are looking to seek a listing on Hong Kong Stock Exchange.
But I think, Lee, one of the great things that Khalid, Bonnie, and I all do is that we're able to expand the market. Like, it's not necessarily 300 companies, 50 companies that Khalid talked about that are in the pipeline. The number continues to grow. Well, we went through the end of 21 through 2 or 3 years of tough markets where people couldn't get public. Now suddenly in 25, we're suddenly getting some momentum. In the US, unfortunately, they've thrown cold water on it with the government shutdown. But we know what the pipeline looks like for 26 and beyond. And I think all of our markets are seeing more and more early stage investors who want to get out, private equity companies, government-backed companies, more mature companies, recycling of companies that have come through private equity. So we're seeing a lot of these fantastic companies that want to come to market, and we're growing the markets together. And our platforms are where people are able to raise money and help the economy. That's what it's really about for us.
Khalid, talk a little bit about the startup culture here, the VC fund, like how is that whole ecosystem combining to bring you good candidates?
Well, this is basically what we have done when we created, so we run 2 equity markets. So the main market, and we started in 2017, a parallel market, we call it NMO, growth as a translation of NMO. This is basically to capture these small startups, family businesses that they cannot meet the requirements. And the demand of listing on that platform, it's tremendous. We are over 130 companies. If we discount Corona period, that's a significant. And the number of applications we're reviewing now on that particular platform is over 50 applications. And every year it's repeated itself.
Yep.
So the exchange, as traditionally do, they provide a platform for exits, realizing of investments or long investments, capital formation for them. And it's a safe, regulated environment that bring different type of investors to these companies, because this could be part of what the startups is looking for as part of their continuation and growth. What's striking is basically for us is these companies moving from unregulated environment to a regulated environment. Do we see a big struggle on them? In some companies, yes.
Yeah.
And this is basically what we encourage. These startups, small, medium enterprises, family houses, if they decide to go public, this decision is not a 3-month decision. This is a 3 years decision. Yeah. So you have to start the process from early on to change the culture, to change the way you manage things, to understand what the investor would look at your company in order for you to perform.
And when you say struggle, are you talking about reporting requirements? What are they struggling with?
I don't think the reporting requirement is stringent for them to comply with. I think it's a lack of being able to understand what are the continuous obligations that they're supposed to live with. Many companies in these small enterprises do not apply compliance officers, for example, governance officers. All of these types are new. All of these types of functions are new to them. So we help them through several inductions prior of workshops that the exchange does for them. But since we looked at private placements, in my opinion, public and private, they used to be far away. They used to be competing heavily against each other. I think the gap now is
Narrowing.
narrowing because of the other alternatives that are coming in place. And this is what we need to be concerned about. And I think we're feeling the pressure, but I'm not concerned because I think this is an evolvement that exchanges have gone through. Started with equity markets, then look at these space of security offering, services offering around issuer needs, financial intermediary needs, as well as an investor needs.
Yeah.
So it will evolve. And I was discussing with Bonnie this morning, it is the base of change on the alternative platforms, on the sophistication of investors, it's unheard of. I have been in this business for the last 18, 19 years. Well, you wake every morning, you come, there's a new channel, there's a new way of doing things, there is a new requirement.
Yeah, I mean, in fact, that's exactly what we talk about this morning. I think if you dial the clock back 2 decades ago, if you have money and you want to invest, you likely want to call up your brokers and then you talk about, what stocks there are available, and then, you may decide to put some money on one stock or another. Now, right, we basically compete against cryptocurrencies, commodities, and people can get exposure through pretty exotic instruments, right, to get exposure to, all sorts of investment opportunities. So I think now we're entering into the stage where exchanges are not really competing with one another. We're working together with one another to make sure that we all stay relevant amidst all these disintermediation, and that's quite a fascinating thing.
Well, that's a good segue to tokenization.
Yes.
And Bob, give us a little primer because
Yes.
I know it's huge, and it's going to change all of our lives. What is going on in the U.S. versus the rest of the world, and what's going to happen in the future?
So tokenization in terms of trading is allowed in U.S. securities, but outside of the U.S. So many of you may have heard of that Robinhood and eToro and some of these companies are trading tokenized securities of U.S. companies outside of the U.S. What we actually announced at Nasdaq, and we're trying to use the benefits of technology, and certainly the blockchain is one that in this area is super relevant, is that we're going to move towards the tokenization of the clearance and settlement piece. The trading actually, to say this sounds kind of almost crazy, but blockchain does their validation in about 1 second or so. It's maybe a little bit less, it's getting faster, but markets trade faster than that. All of our markets trade faster than 1 second. They actually are calculated in microseconds.
Yeah.
So we can't do tokenized trading as quickly as those market participants want us to in the US. And so we'll diminish the liquidity in our market by moving towards that. But what we do know is that the clearance and settlement piece is the natural place and a place that we're moving quickly towards figuring out with the community. Obviously we're bringing everyone along, but we think that that's the best place to use tokenization in the US.
I see we have a question in the audience, if we can get a microphone. Stand up.
Hi, Alex Shravrankov in Silicon Medicine. My question is to Bonnie. You've done such a phenomenal job with the Hong Kong Stock Exchange in recent years. And in the past couple of years, it was a little bit kind of gloomy and doomy. And now it's the listing galore. So everybody wants to invest in Hong Kong. Hong Kong is hot. You've got 300 companies that are being listed. What's driving this growth?
Oh.
And also, what's driving biotech growth as well? And how many of those companies are international? And also, since we're in the Middle East, how easy it is for the Middle Eastern companies to list in Hong Kong?
Okay. All right. Well, 4 questions there. But I think, the first question, maybe because they appointed a new CEO at the Hong Kong Stock Exchange, that explained the upturn. No, I'm just joking. I guess, I touched upon it earlier. It's, this desire on the part of investors to really diversify, just amidst all the uncertainty in the world, they want to put their eggs in more than one basket. And I guess the fact that, China is able to turn out so many fascinating companies and I mentioned the 300 number, which is my pipeline number, that has drawn a lot of attention to the Hong Kong listings. And I guess, the liquidity also, it's another big attraction. Many of you may know that we have something called the Connect franchise. This is an infrastructure that we've built 11 years ago, which basically connect the China market to the rest of the world, meaning that investors in the Chinese mainland can actually invest in securities listed on the Hong Kong Stock Exchange, which includes a lot of international issuers, through a pretty convenient route. And vice versa, international investors can also invest what we call northbound into the Chinese mainland through the Hong Kong Connect franchise. And that has been actually our trump card, I have to say, or our secret weapon. I stopped using trump card.
That's your trump card?
Yeah, because we're the only market which offers that. And you can imagine the growing middle class in the Chinese mainland, which has now reached 400 million, and they are looking really for ways to get a return. And so southbound trading it's now accounting for about 25% of our daily trading volume, and I think that provides a very good support to our liquidity, and therefore increase in turn the attractiveness of our market as a capital raising center. Now, your question about why biotechnology is such we have a very well-performing biotechnology segment this year in Hong Kong. I guess it's because, we are able to attract very, very exciting companies from the Chinese mainland, as well as actually around the world. We have to date attracted biotechnology companies from Singapore and elsewhere. But most importantly, they see it as a convenient way to enable them to maybe get into the phase of doing licensing deals with the big pharma and having an acquisition currency in the form of Hong Kong stock as a useful one. So, quite many things, acting together, but I would say, that, we definitely want this to sustain, and so.
And I think we're going to have to end it there.
Oh,
Thank you three
sorry,
so
I've
much.
taken up the
Great
time.
conversation.
Thank you.
Thank you.
Thank you.